All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for November 21st, 2022. We will start with the sniper trade of the day. So we're looking at CLF, Cliff Natural Resources, on 3-minute charts. Here was yesterday's close. This was the gap down. It moved to here, back to here, and then came down and closed at this level. And then in the next bar, violated that low, and we ended up getting a fill right here with a standard risk box like that. So our trade frame ends up looking like this. Standard risk. If that were to fail, our next target would be back up into this cluster formed by the flipping of the PSAR. So that felt like a significant gap down and failing. So off we go. It almost immediately fails. And what we had by the time we exited this thing, what we had a couple bars that worked in our favor, and then reversed again, which was enough to cause the RL10 to bottom out, to get a 1 2 3 crossing of the baby dragon, and ended up taking about a 0.2 loss. So just a false start, didn't follow through, muck the hand. Check or hold. Now what we got is a standard pattern. What would you call that pattern? That's the working low of the day right there, the RL10. Yeah, we'd call that a supported spring crossing, and we're going to hang a standard wrist box off of it. It's the same wrist box. So notice that it is, we don't need to see it violate the low of the day to determine that might fail. So if it failed to here, we would just take the 1R loss and then stop and reverse on the basis of it violating the belly of the dragon and being a 1R loss. Now, you could opt to wait to see it fail below the collapsing dragon. It would be a collapsing dragon below that red line. I would take this as a kata 2, and in that we had a fail, a weak follow through, and then a secondary fail. I would take that as a kata 2 short right there. But you wouldn't be wrong if you decided to wait for a collapsing dragon at this price level. It's a tactical trade until it can get above the hump of the dragon or the peak of the RL10. So anywhere north of this region is where it gets interesting. Come on. Whoop. Anywhere north of this region here is where it gets interesting. So everything between our entry and that position, this area in here, we would think of that as the tactical trade. And our job is to get our risk out and above our entry somewhere in that tactical trade region so that we can lock in this wedge of goodness. That's the no lose plus dinner for two. That's the one where all of the anxiety of putting on our initial risk and that feeling of the 1R loss is gone and is replaced with a disinterested feeling of a science project. And we're just going to check to see how much money the trade rules will give us. So that's the importance of the psychological wedge of the no lose plus dinner for two. You've raised a quantum level um, of emotional resilience when you do that. Okay. Now let's suppose that if this gets you out, that must get you in because you have a Kata 2 formation already, and it found support above the belly of the dragon. So that's the importance of that location. Now, by the time the RL10 breaks out above your entry, somewhere in here, I think you need to be like at a 2-bar low. And then as that thing starts moving up and continues to, range excursion, you can be marking up, locking in pieces of that wedge. You might decide, hey, let me just use the spine of the dragon as my stop. If you do that, in this bar right here, that entry or that exit is here. And I think that's too far away. That's why I would like to be instead in this bar. I'd like to have my stop here, which is the 2-bar low. And then when that goes up, I like following up with 2-bar lows and taking advantage of this acceleration, especially up to this peak of the RL10. This is where the statistical resistance should stop it, because that's where it stopped yesterday and then failed down to here. So a breakout above that price level is now significant, and we're out of the tactical zone. And so in my view, your job was to get your stop from here to above your entry level. And as long as you decide how you want to mark that up, to me, 2-bar low makes a lot of sense when you feel that thing accelerating like that. How quickly do you go like from a trailing stop of a PSAR to a trailing stop of the dragon to the spine, and you say, oh, I need to just be locking in some gains up in here. That's your call. At this point in the trade, from what we see, where I want to be is like about here right now. And how soon can I move this to a 2-bar low? When that bar closes, I want to move. So now we're in this condition, and for the first time, we notice that this bar right here, this thing looks like this. It opened, it ran up, and then it closed lower. That's the first time in this little thunder run that the low, or that the close was lower than the open. So like in that bar, it went up. In this bar, it closed. In this bar, it closed. This is the first time that began to fail, and the RL10 peaks. So to me, if you're using the 2-bar low, your exit is right here, and as you're going to see here in a minute, you'd end up getting out like right about there. And you'd be pretty happy with that trade. You had exceeded, the initial target, and you were able to get an extra piece out of it. Now, if you end up exiting here, then a price greater than the peak of the RL10 is the signal to get you back in. So if you exited and this thing immediately reversed and went back up, you would just re-enter right away, because why not? Let's see what I actually did. Not good. I'm not happy with that. Now, in my view, where I should have been was exiting here and then re-entering after this little condition. I should have exited here and then re-entered here with the standard risk box, where this standard risk is equal to that one. I'm not satisfied with this. I feel like I gave back too much. I gave back about 40% of the open gain. Wasn't happy with that. Ended up taking the PSAR. This is what happens when you just decide to buy it and let the PSAR be your guide. There are times when this thing won't halt right here in the middle of the dragon and will continue to come down and kick you out somewhere around in here. And the PSAR rule could very easily have let me give back that much and only retain this much, which is about 1R. And I would have given back, in my view, too much. So I'm not really satisfied with that decision there. Not happy with it. Should have exited here and then re-entered here and avoided that angst. So I need to be better. After that nice run up, I decided not to take the PSAR flip. If you had taken the PSAR flip, like right here, that's legit. And then if you're short with a standard risk box, you look something like this. On a maximum favorable excursion to here, you should not lose money on that trade. I didn't take it because this was the strongest symbol in my stack today, and I didn't want to be short the strongest symbol in the strongest sector. So I did not take that trade. At this point, I was kind of regretting it, but, what are you going to do? I do take that trade. What would you call that trade? What pattern? Kata 2, because we've got a low, a higher low, a higher low, a higher low, and a PSAR flip. After really not that much of a painful sell-off. In fact, the size of that little sell-off was from guys taking profits here, I suppose. This little sell-off was from folks that were taking profits from that little move. And once that is done, the buyers come right back in. PSAR flip, Kata 2, standard risk box, off we go. Check or hold. Now, in my view, where I am prepared to take it, I was not prepared to take this short, but if this thing does not get above the PSAR flip and the R10, notice that those are the same price. They always will be because of math. If this thing does not get above that line, but fails immediately and fails through here, I'm short on that one instantly as a collapsing dragon, because you would have a high, a lower high, and then a break of the dragon. That would be a collapsing dragon, and so I would be short on this one because you have that pattern. Check or hold. By this time, this stop, by the time of this move happening, somewhere in here, I feel like I need to be about there again to lock in this little wedge. No lose plus dinner for two. Science project. And by this little price action, where I see it starting to stall and weaken, I don't mind being at about a no about a 2-bar low. So I could also just jump this right up to here and maybe lock in this piece as well. Wouldn't be offended because that's more than a 1R. This is already more than 1R in hand. Making bricks. Holding on by the skin of his teeth. Now, at this price, the fact that it's able to hold above my stop, I now feel like I can pick up the piece. Now, at this point, when I see that bar jump way up, and then this thing come down and then fight its way all the way back up, that was the test of this support level of the 2-bar low. So if this little buying pressure is strong, this should keep going. So I don't mind moving my stop right to here, because that price is going to negate the buying pressure that took it all the way back up. So if it rolls over right away, I don't want to give it back any more than that. So I take my stop from here and I just move it up to there and I lock in that extra wedge, and now I've got all of this in hand, which is about, that's 1R, so that's about 2R in hand. So what I'm doing is locking in pieces. Standard exit at the PSAR. Re-entry at the PSAR flip. What would you call that re-entry? Kata 2. Standard risk. I take the exit when the R10 crosses the PSAR. We're later in the day. And it's starting to weaken. You notice that price is starting to tickle that in the bottom of the dragon. And then when price, or when the RL10 breaks, then I'm ready to get out. And that gives us about another +1. So there's probably 2 here, 1 here, and I think it was 2, maybe 3 on the other one. So this is about a total of about 6R in Cliff for the sniper trade of the day today. Yeah, so when we look back at that from a distance, standard wrist boxes, once it got moving, once it had cleared this yesterday's peak, it never really looked back. This was like a morning hook and go. And then the Kata 2s are your friend. And the PSAR is your friend. That's Cliff Natural Resources, okay? Let's see. I want to look at the 30-minute chart first. So today in the S&P was mostly quiet chop that closed right in the middle of the. That's the 1 day. This is the 5-day look back, 10-day look back. Here's your 10-day low. There's your 10-day high. And so we've had about 1, 2, 3, 4, 5 days of just sideways chopitude. And the range of the 5-day is small compared to the size of the 10-day range. So we're getting some range compression in here. We'd like to see that now that it's survived, we'd like to see that be the nice base for a breakout, but we're ready for a breakout to the downside because this is still a bullish normal market with gains to be preserved by some of the aggressive traders. So we'll keep that in our mind. Now looking at the daily chart instead of the 30-minute, we move out to the daily. And again, we're seeing the 5-day, the 10-day, the 20-day, the 30-day look backs. There's 60. Here's our 5-day low, 10-day low, 30-day low. So we're in the top portion of our 30-day range, in the top portion of our 10-day range, and stabilizing. This little triangle wedge is a critical state ready to break out or break down. It has to get above the 10-day high, like 402, to be very interesting. That 402, 404 range includes this previous peak. It has to get above that 30-day high for this to preserve the momentum of this move. So we'll be watching for that between now and Thanksgiving on low volume. Would not be surprised to see some tactical maneuvering. If you are holding profits from this move out of here or out of here, I think you want to make sure that you don't give those back. So to me, 390 is sort of you have to be respectful of that price level, because if that violates, it could easily get here this week, and we don't want to give back that much. Okay. All right, let's look at the indexes today. Mostly quiet. So the S&P was off 0.36. Stronger was diamonds, which was right at the edge of the cut line between winners and losers, right here. Treasuries were best, plus 0.42. Closed above 100. That's some continuing recovery. Weaker were the small caps at minus 0.5. The Qs minus 1%, and then emerging markets minus 1.26. In our little specialties, here's our, we'll look at the metals first. The metals were the best. That's Cliff and U.S. Steel were up 5% and 3.8 in the metals. And our other metal was down here in Alcoa, which was, much weaker. So we're looking for these to have continued strength. Among the chips are three little semiconductors. We will notice that the S&P is here. Tech was here. NVIDIA was slightly better than tech, but worse than the market. But Texas Instruments considerably worse than the NASDAQ, and Intel especially worse at minus 3%. Devon Energy off 3.5%. Okay. All right, let's take a look at the traders today. See how they did. Here's a couple from my brother. Let's see how the boy did. He's got U.S. Steel in the metals today. Standard entries for the sniper. Here's a 0.5. Routine re-entry with a scratch. Holds support, breaks back out of the dragon. Long. There's the 2-hour battle drill. Automatic entry. The next 2-hour battle drill. Automatic entry. So that's his first position, second position, third position. Here's the 2-hour battle drill. It never gets to that level, but instead rolls over. So he gets all out where he's supposed to. and brings home 5.4 and 3.3 is 8.7 and 1.1 is 9.8 plus 0.5. Call it 10 and with 0.3 for the kitty. So there's 10 in U.S. Steel. I mean, U.S. Steel for crying out loud. In Cliff, he brings home 6, and that's essentially what we got. He's employing, his 2R battle drill would have been in up here. He takes the K2 because it wasn't failing. He gets a 2R battle drill here, and then all out here for 6, and 16.2 in the 2 steel companies today. So nice work there, Bill. So we're welcoming Kyun, who's in the creativity course, and he's discovered an interest in refining his techniques with some day trading to learn the patterns. So here's the open. He looked at this as a failure of the OR3 and thought maybe there was a trade there. He would be correct. He was trading other symbols, so this was he was marking it up for study purposes, but yes, that was a trade. This rolling over, breaking the PSAR, and then breaking the VWAP is a trade. This as the exit, so yes, that's a trade. This continuation is a collapsing dragon. It was a little bit slow, but it's still pretty good. It's in the correct bar. That would be a great stop and reverse or just an exit. The stop and reverse is technically here, but he did get it here. I'll take either one. And so this was a 0.1 on the long side. This was minus 0.45, so he nets 0.5 out of that sequence. Let me clean that up so you can see that. So this short stop and reverse cash nets him 0.5. This little rollover, I want you to get used to this pattern. When you have a high, a low, a lower high, a violation of that PSAR is a short. You can wait for this, but you really want this. You could live with the PSAR or with the VWAP being violated, but I like that kata 2. Then that's a position. Then this is a kata 2 long. You would rather get those earlier in the day before these things chill out a little bit too much. So that was Brazil. Here he is in Cliff. Let's see what we got. So we've seen 3 of us finding the mover. That was exactly the one that got me, and then the stop and reverse was perfect. He goes for the 2R battle drill, scratches that one, and cashes the winner. That's the kata 2 reentry, or this one is a kata 2 reentry. This is late getting in. And then if you're here, then that shouldn't get you out. You could, even if you just use the PSAR and the RL10, you end up staying in all the way up until here like we mapped out before. But pretty nice work for 2.1 with his first excursion in posting charts. He said he felt like a noob. If that's what a noob feels like, keep feeling that way. That was pretty good. Here's Tim for 1.2 in Disney. So Disney loves the return of Bob Iger as it gapped up about 8%, and then the rest of it is, oh yeah, their business still sucks. So there were some moves in here where Tim gets paid for netting 1.2, found the mover, and faded the gap. Tesla was a tricky one today. I like this move after the gap down and then the reversal up. I like this as the exit. I'd like to see you get short right there instead of here, and then we'd have made a little bit on this. But even so, the scratch is fine. And then when that fails again, you got to get short inside here. Never violated the PSAR the whole way down, all the way to here. So technically, that short could have come all the way to here. I like the reentry. Not, I think, tired from the day, just in time to miss that. But that's a good when you're out of will. That's a good time to exit the position. That's professional. Pull over when you're tired, when you're driving, right? IBM was a scratch. Lots of volatility in this one. There looks like there's some tradable moves inside there, but the size of those individual bars are so large that I don't know that that's tradable. I think this is better on a swing with wider stops and longer time frames. It doesn't feel tradable intraday to me. There's not enough orderly moves in there. When you look at the scale, that's 10 cents in those chunks. That makes this is not as volatile as it looks. So I don't think IBM is as tradable intraday as some of our other smaller cap movers. I think nice job on Merck. Although I think we could have been in here as a Kata 2 as well as this one. That Kata 2 doesn't feel like he was tired from his day job, so he got out because the will wasn't there. But there were a couple tradable moves from the Kata 2, so just get used to the pattern. You're building your cardio as we speak. Here's Nolan. Take a look at our other Tesla trades too. Let's see what we can come up with here. This is a 3-minute. So the OR3 is here, so that's a good place to be short. Good scratch. I don't see the reason to get long here. Unless we're going to say 1, 2, 3, but that wouldn't be until up about here. I like the scratch. I prefer the reentry short. There wasn't much, but it didn't break through. It broke down again, scratch, and you kept shooting and then got paid on the one that worked. There wasn't a lot of room in that, but you can get paid. That's good discipline. When we see Tesla break to the upside, it's going to be a large move. Let's see. So this is Devon. There's your OR3. That should be short right about here. We should get paid on this. And then that's where that short should be. That's premature to get long in my view. It hasn't even crossed the VWAP yet. And we noted weakness in energy this weekend. So even if you take that's a good stop and reverse. It gets paid. It feels like we should have gotten more out of that by taking advantage of that move. Let's see. Let's shift to the daily report now. Excuse me. Long day today. We're still in bearish normal, excuse me. So the bias is down. The volatility is pointing to the possibility of a retracement here where it fails at this level. We're not surprised when you get a sudden increase in volatility to the downside. We're seeing the weakness roll over here on the 2-day and 10-day. Strength in Coke, Merck, weakness in Tesla, Alcoa, and Intel. Tesla's got more room to fail. It was headlines down 55% for the year. In the Dow Tactical, there was lots of dojis today in the small range day, which will always lead to a number of auto framers. You had strength in Merck on big breakouts. Smaller breakout, but still good in Coke and in Walmart, just quietly getting it done. Breakdown continues in Tesla. That's really the most important stock right now on everybody's mind, getting more volume too. ETF tactical. A boatload of auto framers, better than 2 to 1. The only breakouts today in staples and utilities in the defensive sectors. I like the strength in Brazil. It may be Brazil's time to pick up the lead if the U.S. continues to weaken. Standard numbers in the auto framer and the squeeze. Lots of squeezes today because of the very narrow range in the S&P. Looking at sniper targets, a couple tasty ones here in the S&P, including Tesla, Godzilla in effect, and then Tesla and Bitcoin in our tactical symbol set. That's the winning plays right there. Some big names that jump out at me here: the Fangs and DuPont, as well as Halliburton in the energy. That could be collapsing time in energy, so I would be mindful of those. I'm in favor of these double green volatilities. There's Halliburton again. Yeah, I'm just noticing that weakness here in oil with volatility. Ethereum, Tesla, blended commodities, weakness in energy, and Cliff, though that's going to be just because that's going to be my number one mover tomorrow. It's very quiet on the 5-day volatility in the red, and then today's move was a 2 sigma move. That Cliff is in play. Okay. All right, that's everything for today. We'll be ready for him tomorrow. We'll get this published and posted. And we shall see you in the chat room. Luis, I'm going to answer your excellent question tomorrow. I just ran out of gas today. I just didn't have it in me. But it was very good insights, and I want to make that a special lesson tomorrow. I have a little bit more time to discuss it tomorrow. But yeah, you're on exactly the right track in pulling together different pieces of the mosaic. And we will turn that into a lesson for tomorrow. So keep up the great work. We'll see you guys tomorrow.